Hello, everyone. Happy Monday. Welcome. Happy Tuesday. Welcome to the Final Bar, a special end of the long weekend edition. We'll talk about the market chopping around, giving back some of the earlier gains this afternoon and selling off going into the close. Overall, lower than we were Friday, but not dramatically lower, although some pockets of the market really showing some distribution. We'll talk about the sell off a little bit here in mid caps and small caps, but also in a big way in cryptocurrencies. Ladies and gentlemen, this is the Final Bar. Hello, everyone. Welcome to today's edition of the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we focus on the markets using the language of technical analysis, looking at charts, data visualization techniques to quantify investor psychology and sentiment. Focus on the important messages that price, breadth, sentiment, trend, momentum that they all bring to help bring investor decision making into proper light. The market overall choppy today, right? Friday was finishing in a position of strength overall, pushing to the upside to lead into the long holiday weekend. Today we come out bit of distribution, and the distribution was not just felt in the equity markets. Cryptocurrencies really distributing to the downside. We're going to look at the chart of Bitcoin, maybe Ethereum as well, but also precious metals, gold and silver taking a bit of a pullback. Certain stocks rolling over as well, particularly in the industrial space today, utilities and others. So we'll look at some of the areas of strength, the FANG stocks and others, but also focus on some of the areas of weakness as we go through our normal Monday routine of hitting the market from the macro side, the bottom up stock picking side, and then focusing on sector rotation as well. We have great guests on the show. I had a lot of fun last week talking with one of my former colleagues, Denise Chisholm from Fidelity on Thursday, and many others. It was a really good group of discussions. We have more great guests for you coming your way this week. Tomorrow on Wednesday's show, September 8th, we have Ryan Dietrich from LPL Financial. On Thursday the 9th, Todd Sohn from Strategas in New York. Then coming up next week on the 14th, on Tuesday, we have Louis Yanis from WealthNet Investments in Colorado. And then on Wednesday the 15th, Alessio Rutigliano joining us for the first time. Alessio is an expert in Wyckoff analytics, and it's a great segue into an upcoming event coming up from the TSAA. That's the Technical Securities Analysts Association of San Francisco. I'm a member of that organization, and many of my peers in the industry as well. Based in San Francisco, they're having our virtual fall conference coming up on September 18th. It's going to be an all-day affair. Really in Pacific time zone friendly. So it's sort of 9 to 5 Pacific time zone. But it's featuring some great guests, many of which have been on our show, actually. Ari Wald from Oppenheimer, Craig Johnson from Piper Sandler, Chris Kimball from Kimball Charting Solutions. My friend Arusha Paris from IBD is going to be on there as well as Alessio that I mentioned. He'll be on the show next week to talk about applying the Wyckoff methodology to the cryptocurrencies, and he'll be presenting at that event as well. So go to the TSAA website, tsaasf.org, if you're interested in joining that event. Let's continue on with today's market recap. So again, we'll do our normal Monday routine here on a Tuesday, where we're focusing on the three-pronged approach to market analysis. We'll start macro, we'll start big picture, talking about the overall indexes, some asset allocation. Then we'll talk about sectors briefly and focus on some of the strengths and weaknesses. We'll take a break and then come back talking about shifting stocks, focusing on some of the individual names that are on the move that I think you should be aware of. The goal here in a little less than 30 minutes is you get a good recap of all the key charts in each of those three important areas. Let's start with the S&P 500, down about 1/3% today. Worth noting today, mid caps and small caps down even more, about 3 times that sell off to the downside. Worth noting what was positive, though, the NASDAQ. So you have the situation where it's sort of the FANG stocks that are really working. The technology, communication services stocks doing just fine. Consumer names, that's holding the NASDAQ in the positive, while the S&P, the Dow Industrials selling off a little more significantly. A sort of new economy over old today. The VIX actually back up toward the 18 handle, not quite getting there today. Interest rates actually rising here. So the TNX is up around 137. That's the 10-year yield. And you can see the TLT that we often use for bond prices just dipped below 147, down about 0.8% today. The dollar index actually bouncing back up after distributing through much of the week last week. Gold and silver and other commodities are where you're seeing some negative moves today. So the GLD down almost 2%, silver down a little less than that. We're going to look at those charts here momentarily. The real red on the screen comes when you get to the crypto tab on your market overview on your dashboard on stockcharts.com. You can see Bitcoin down 11%, Ethereum down almost 13%, others down significantly more. So quite the distribution that you've seen in crypto land. Let's start with the chart of the S&P. We'll get through as many of those macro charts as we can to round out this segment, talking about the big picture. So the S&P 500 chart, by all definitions, continues to be in a consistent uptrend. I talked about this with a couple of my guests last week, and just to reinforce what we discussed, I think an uptrend is in place as long as three things remain positive. Do we keep making higher highs? Last week, that's a thumbs up. We have done that. So we continue to push this trend higher in the form of higher highs. Do we keep making higher lows to satisfy that if and when we do pull back? And I will tell you, September is the weakest part of the year. So this is, if there is a time when I would expect stocks to sell off, we're kind of in that part of the calendar when it would make sense to do so. But if we would, I think your eye is on this first red horizontal line here. This is calling out the August low, because as long as we remain above that, then we keep making a higher low. And if you look back through the course of 2021, that's what the year has been: higher highs, higher lows, a classic Dow theory uptrend. So do we keep making higher highs? So far, that's a yes. Do we make a higher low, meaning do we stay above that first red dash line? I think that would be the next step. The third check in the remaining in a bull market list would be, do we remain above the 50-day moving average? This year, it's been all about the 50-day. It's been about the S&P and many individual stocks as well, remaining above that important smoothing mechanism. A lot of institutional investors, individual investors use that as just a starting point, right? As long as we remain above the 50-day, things are not getting that bad. If that changes, then you really have to start questioning the longevity of the trend. That's what caused me to certainly get a little less optimistic here in early March, February to March, which ended up being the deepest sell-off of the year so far, year to date. Closing below the 50-day moving average was a key part of that. All right, really need to think about the potential of retesting the September lows from 2020 and so forth. Did not materialize, right? We very quickly reverted back above the 50-day, made another new high, and I think that sort of cleansed the palette for another leg higher. So those are the three things to look for. Until you see all of those three things, I would argue you need all of them to confirm a reversal of this uptrend that we've been in for 8 or 9 months. Until you see those things, the trend overall is overwhelmingly positive. Now, it's worth noting as we jump around some of these charts here, the Dow Industrial is pulling back a little bit. And it's not horrible yet, right? So the Dow Industrials broke above 35,500 there in early August. From there, it sort of sloped downward. So while you have the S&P, the NASDAQ going higher, we'll look at that here in a moment. You see the Dow Industrial is actually making a lower high so far in the last couple of weeks. Still early on for them. And don't get me wrong, the trend overall, I think, is still very much constructive. But you have a lot of these sort of old economy names, especially today. You have things like industrials, utilities. I think we're next to last. But industrials especially, look at the chart of 3M or Eaton Corp or Honeywell. Some of the stocks hopefully we'll get to a little later in the show. You'll see what I mean about the distribution, why the Dow Industrial average is starting to come down. Compare that chart we just looked at to the NASDAQ 100. Compare that to the FANG stocks, right? The New York FANG Plus Index. And you can see why this market, this uptrend, especially in the last month or two, has really been dominated by the new economy names, things like technology, communication services, and so forth. And again, we'll talk about some of those sectors here momentarily. Before we get there, I did want to highlight two sort of macro charts that I think are important to pay attention to, because we had a pretty good distribution in gold today. Now, the GLD, when we wrapped the week on Friday, we talked about this particular chart. We talked about the RSI getting to 60 and talked about the importance of getting above that 60 level, which would confirm a transition to more of a bullish phase. We talk about breaking above this trend line was encouraging, but you really want to get this thick purple trend line out of the way, this horizontal level. This is the swing high from July and August. We've remained above there and just got right back up to there on Friday. The answer so far today has been not happening. It's been back to distribution mode. And again, until you get that rotation up, until you break above the most recent swing high, get the RSI above 60, we're still in a bearish phase according to the chart. And I think today's sell-off in gold and precious metals just remind you that we are not in the all clear. And I think that's why it's important to wait for a break above the swing highs yet. Has not happened yet. That's still, I think, everything I just said is still very much in play. Breaking above previous resistance, getting the RSI above 60 would give sort of an all clear there. Just finally, very quickly on Bitcoin, and then we'll talk about some sectors. So the chart here has changed dramatically. On going into the weekend, we talked about that 50,000 level, the importance of getting above there and staying above there. We did get above there, and over the weekend we continued to plot higher with closes in the 51, 52,000 range. Today really unwound in the last 24 hours, unwound much of that. And what's interesting is we're right back into some of these key support levels, and this is why these levels have served as important support previously, and I think they could be important. We're currently trading right in the shaded area, and I haven't updated the chart to move this level over, but you can kind of see it. Sort of this 47, we'll call it 46, 47,000 range. That's the swing low from the end of August before we rotated higher. We're right back in that sweet spot. We touched the low from mid-August. That's the 44,000 level. That's that pink shaded area that we've talked about before. Also the 50-day moving average, the 200-day moving average. We're sort of right at this confluence of support. So I think the Bitcoin chart is at a key point. I would not be surprised to see these levels hold. You're seeing a bounce off of these depressed levels as it touched the 50-day, touched 44,000. I think you'd expect support there until proven otherwise. Our next segment now is called Sector Setups. We talked about the big picture. Strength in stocks really driven by the NASDAQ. We talked about some of these other asset classes like commodities, cryptocurrencies, getting some of the pullback today as stocks holding up there just fine, driven by tech and others. Let's talk about the 11 S&P sectors. Best way I've learned to do this is using the RRG, the relative rotation graph. If you're unfamiliar with this methodology, my friend and fellow StockCharts contributor, Julius de Kempener, does a great job of describing this tool that he designed in his own show called Sector Spotlight. I encourage you to check that out on StockCharts TV on demand or on our YouTube channel. It does a great job of showing how this visualization can help you make sense of any group of assets, really. But I found it especially helpful with the sectors and how they rotate around the S&P, which is at the crosshairs there in black in the middle. We don't have time to go through too much of the methodology here, but I will tell you how to read this. Further to the right means strength. So technology, healthcare, using the weekly data, the longer term version of the RRG, all showing strength. This is where you've seen the strength emerge and continue to improve. So the XLK, the XLV, the two strongest sectors based on their most improving characteristics. The strongest sector, though, has been real estate. And the fact that it's furthest to the right tells you that it's been the strongest on a relative basis over this look back period. You can see it's just starting to potentially hook back up to the northeasterly direction. And what I found using this methodology for years and years, one of the most profitable ways to think about is when you get a cyclical turn, when you get a cyclical rotation, and it's all happening to the right side of the y-axis, because that is sort of the middle point. That is you have performed in line with the S&P. To the right means you are outperforming the S&P using the weekly data. And if you rotate like this in a clockwise motion to the right side of the zero line, what that basically means is you've been outperforming fairly consistently. It's just the momentum that is increasing or decreasing. So either it's a new push higher or it's a bit of a pullback, all using the relative strength data. But that has often been a really successful way to think of it. I'm very focused on real estate and whether it's able to continue that rotation to the northeast. In terms of improvement, utilities is also one to keep an eye on here, rotating in the direction of improvement northeast. What is an avoid using this methodology? Energy, by far the least attractive on a relative basis, heading in the lagging quadrant and heading southwest, the direction of deterioration, what I tend to call that, is pretty much an avoid using the RRG at this point. Things that are to keep an eye on, but still really underwhelming: financials, industrials, materials. Sort of these cyclical sectors are all rotating, on the left side of the zero axis of the y-axis. Continue to rotate in the wrong direction. These heading northeast would be encouraging, like you see with utilities, like you saw before with healthcare, but we're not seeing it quite yet. So the sectors to watch, according to this methodology, in my opinion: real estate, technology, healthcare. Let's look at the 11 S&P sectors on the candle glance function. This is a really good way, by the way, to take any list. I like using it with a lot of ETFs, with a portfolio, with a watch list. It's a great way to just look at all of the charts. Think of them as taking a bunch of pictures and throwing them on a table and just sort of flipping around and seeing which ones stand out at you. This is kind of what you're doing using the candle glance function. If you have up any chart list, just change the view to the candle glance function. You'll get it to this particular view. It's a great way to look through a big pile of things and start to make sense of them. So what stands out? As always, I like to start with which are above their moving averages, which are below. The things that are not above two upward sloping moving averages are the places in general I would think to start to avoid or to be leaning away from. The only two that fit that criteria are energy, which have really been in the distribution phase for quite a while. We've talked about that bullish divergence and bullish momentum divergence because the lows have gotten lower. The momentum, if you look at the RSI, it's actually sloping higher. We can look at that chart here very briefly. So you have a lower low July into August. You have a higher low if we look at the RSI, which I'll add here at the bottom of the chart. RSI 14-day is good. All right, so here the bottom series is the RSI. So we can see lower lows in price. You can see higher lows in RSI, right? So imagine it as the price going lower, but the momentum is actually improving. You saw that the last time back here in October of 2020. This is when everyone had written off energy, and all of a sudden it starts to be the most important sector to own for the next 6 months. And so again, not that I expect an exact repeat of that, but it's worth noting that a lot of times after a big distribution, we'll get this bullish divergence. You look to see if we break to new swing highs. Getting above the 50-day, I think, would be a great way to indicate some follow through there on the XLE. Finally, just want to point out the other one, industrials. And again, we'll talk when we come after the break about some of the industrial stocks that are struggling a little bit, selling off a little bit today. The challenge, though, I think for industrials is the fact that the relative strength has been sloping downwards for the last 3 months. This is a sector that made its high in May, while things like tech, communications names, consumer names have gone to new highs. This sector has actually been sideways. It's not made a new high since May. Now, once again, we're selling off that 105, 106 level on the XLI. The relative strength going downwards is the most negative part of this chart for sure. We need to take a quick commercial break. We'll be back with our next segment, Shifting Stocks. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. I'm Dave Keller here at StockCharts.com. It's so good to have you join us every weekday after the close, 4 p.m. Eastern, to break down the market activity using the power of stock charts. A couple quick announcements here. First off, a reminder to send us your questions. We are here to help you as you're analyzing your own charts, as you're going through and using the stock charts platform. You're trying to learn technical analysis, whatever it is. We are here to answer your questions. You can get them to us a couple different ways. First off, you get email. Our email is thefinalbar@stockcharts.com. We're on Twitter at FinalBarSCTV. We are on YouTube. Just put a comment below the video you're watching on our Stock Charts channel. We would love to hear your questions. Hope to answer one of those in our next mailbag segment, which will be on Friday's show of this week. Also, go to StockChartsTV.com. Use your email address. You can set up a free account, start watching all of our great content from our website, also from all your mobile devices. Great guests who do we have? Denise Chisholm. We've had so many fantastic guests last weekend. Before that, Bob Lang from Explosive Options. I remember having fun speaking to. All of our great guests, our great special events like The Pitch, which will be coming up here again in a couple weeks, and many others. Go to StockChartsTV.com. Also, just go on your mobile device to any of the app stores and search for Stock Charts TV on demand. Our next segment today is called Shifting Stocks. So the third piece of our process, as we look at the big picture, the macro environment, we look at sectors and how they're rotating. We now look at individual names and focus on some of the key charts of the day. We'll start with healthcare. So I mentioned the healthcare sector, and it's interesting. One of the charts we've been talking about regularly is Regeneron, just because I think it's a classic illustration of the rotation from a chart in distribution phase to accumulation phase. And what marks those changes, or what would indicate a change in character, or how I would describe a change in character on the charts. A couple things. So most importantly, I think we rotate from a downtrend to an uptrend using Charles Dow, very classic methodology. Lower highs and lower lows is a downtrend. Higher highs, higher lows is an uptrend. So that rotation that you see really first quarter into the second quarter, really into April, when you start making higher lows, you start making higher highs, right? You can see that swing, that transition is impressive. Getting above the moving averages, having the bow start to slope higher is an indication of a rotation from bearish phase to bullish phase. The relative strength, I think, is most important from a downtrend going through March, April into May, really now in an uptrend, showing that the stock has gone from underperforming to outperforming. I think one of the goals of any investor should be capturing or identifying charts, identifying assets that have that rotation, and noticing as the rotation begins, having systems in place to try to screen for those, and then identify when you want to take a position. Depending on your own risk assessment and your methodology to figure out when it makes sense to get into your portfolio. What's interesting now is Regeneron making new all-time highs, getting above the July 2020 high, now stalling a little bit, pulling back a little bit today, which is totally normal. So now we're right at the breakout level, which is around $660, which is the high from July. We're sort of right there. So holding above that would be a nice confirmation of this uptrend that we've been in. Recently overbought and coming out of that overbought region. So you can see a bit of a pullback, but overall, an interesting chart to continue to keep an eye on. Overall, I think the weight of the evidence still very positive on a chart like this. The 50-day moving average could be an interesting level to watch on any sort of sustained pullback. But overall, a chart that's rotated from distribution to accumulation in the last 6 months. The fat finger typing of Regeneron takes you to another pretty decent chart, which is Repligen, RGEN. And this is a chart that's a little more extended. So some of the stocks within healthcare, and this is a biotech name you may or may not be familiar with. This is a stock that actually broke above its February high and it's had a nice follow through. So breaking above the swing high was an important one. Then just continued to the upside. Now extremely overbought, and we often call that a good overbought, right? Overbought does not necessarily mean a bad thing, right? When a stock is overbought, I think a lot of people oversimplify and think, all right, that's a bad thing. You don't want things to become overbought. Remember that RGEN actually became overbought in late July when it broke above the swing high there in from early July, sort of pushed to the upside, started getting above these highs from earlier in 2021. That's when it first became overbought. It's essentially been overbought this whole time. I always tell people overbought means up a lot. That's not a bad thing. It's what you want, right? You want to buy stocks and have them become overbought and stay there. That would be the perfect scenario for a lot of investors. And that's kind of what you've seen with RGEN. And again, I think at this point, when a stock has had a run like that, you go into trend following mode. You try to lock in those gains, bump up your stops, continue to follow the trend, let the winners run, and let that sustained uptrend work for you until you see signs of distribution on a day like today, continuing to push onward and ever upward. Now, it's also worth noting that the top ranked group within the healthcare sector, if I look at the industry groups that we use, is actually the medical equipment group. And one of the top ranked names there is InMode, INMD. This is a mid cap name. It's sort of toward the top of the list of our mid cap scooter rankings. But I love this long term uptrend, higher highs, higher lows, above the 50-day moving average. Look how the relative strength has just been in a consistent uptrend. So when I'm asked on a chart like this, is it too late? I would say you could say the same thing back here in January, right? When it's breaking to new highs, when it's breaking above the moving averages, breaking above previous highs, it could, and it's overbought. You could think, wow, that feels like it's way too late. And look at the great run that it's had since that moment. So I would encourage you to not think of something making new highs as being in the too late list. Those could be opportunistic, as again, and as long as you manage the risk effectively, as long as you think about that uptrend within the context of your overall risk management assessment. Now, it's no denying that the FANG stocks have certainly been in a position of strength. You're seeing more of that today. I was looking on the member dashboard. I in the lower left just have what I call the FanMag stocks. Those are the 6 names. So Netflix, the biggest gainer today, up almost 3% today. But you can see Facebook, Apple, and others in pretty good uptrends. The only name out of that group that was down today was Microsoft. But you can see the rest of these are in pretty decent uptrends. And I'd point you back to this chart. This is a chart we looked at earlier this year. And what I mentioned here in May was, this may be the most important chart to watch because we're in what's called a pennant pattern. You had a big run in Apple, and then you had this pattern of lower highs and higher lows. And the question is, which way does that pattern resolve? And if it resolves to the downside, I would be very concerned about risk management because that tells you that people are getting out of a big benchmark name that has been a consistent gainer on a relative basis. That resolved to the upside, and you've seen a nice follow through to the upside. And the FANG stocks overall, I think, still are really good charts to be looking at in terms of long term uptrends. But I would focus one of those FANG like names, Tesla, which is just starting to sneak to the upside here. We talked about the resistance in June, the resistance in July into August, and it's now starting to break above those previous highs, up over 2.5% today, breaking just above 750. And overall, I think you can't deny this is a chart that's rotated from distribution to really consolidation to sideways to now accumulation, right? It's really in an uptrend of higher highs and higher lows. I think getting above 700 was a key move. It's now remaining above that. It's sustaining that move and pushing to the upside. I have to consider Tesla in a bullish phase right now with the RSI remaining above 60 and pushing above there this week. One last group to talk about, maybe two, if I can sneak them in there. The gambling stocks all jumping today, worth looking at. Now, some of these are from fairly depressed levels. And if you look at when you saw lower lows in price, higher lows in RSI, this is what I talk about on the chart of the XLE and some of the energy stocks. What you're seeing today with some of the gambling names are nice resolving of that momentum divergence and pushing to the upside. So you're seeing Win move higher today, but I would say that the bullish momentum divergence back here into mid-August was the first indication that things might be starting to improve. Now, not all of them. It's not a super homogenous group at the moment, only because the long-term trends look a little different. All of them gapping up today or pushing higher today, which is fair, but the trend characteristics very different. LVS had been more in a longer term downtrend, had actually been underperforming for quite a while. I'd love to see if you can sustain a higher low, which you may have gotten with the gap today, and maybe Penn would be another one to notice. This is a little more of a gradual rotation. So you have Win, Penn, and LVS, all three charts a little different, but the consistent pattern is a rotation to the upside, and the relative strength really starting to improve that I like. We don't have time to go through some of the cyclicals, but I'd point out the chart of Newmont Mining, some of the industrials like Eaton Corp and Honeywell really starting to feel the pain today. And again, the question is, are they able to hold support? Think about the risk assessment on each of those. We need to wrap the show, go to the 3 and 3 charts in 3 minutes. Here we go. Chart number one is the NASDAQ 100. We talked about the strength in the NASDAQ versus the weakness in something like the Dow Industrials. I think you're really seeing that new economy over old economy theme play out on a day like today. And while I still would argue that there's tremendous upside on some of the infrastructure names, things like industrials and materials, I think there's a lot of upside for the economy and reflected by some of those cyclical stocks, but you're not really seeing it today. At the end of the day, it's not about what should work based on the themes that you see evolving. It's what is working. And I think that's the value of technical analysis. The charts are telling you that the NASDAQ is working well. It's telling you that technology and consumer communications names are doing better than the average stock. And you can see that by the fact that the NDX to S&P ratio was in a downtrend essentially for the first 6 months of the year. And for the the third quarter, so far has been in a pretty good uptrend. June, July, August, really, right? So the end of the second quarter. So as long as that relative line continues to make new highs as it has today, as long as the NDX continues to make higher highs and higher lows, certainly seems like a compelling chart continuing to show leadership characteristics. Chart number two is the chart of healthcare. I hit on a couple of the names for Regeneron and InMode, INMD, and others, RGEN. That are showing some interesting characteristics. There's a lot of interesting charts in that space, but it's a fairly diverse sector. You have some stocks that are not nearly as attractive. Others like Johnson and Johnson. Some of the big pharma names certainly look a little different. And you have equipment, supplies. You have life sciences. You have a bunch of different things sort of compacted into this fairly diverse sector. But when you bubble all of those up into the XLV, you see a price trend that's in pretty good uptrend. But most important on healthcare in terms of the chart is the relative. We talked about the RRG and how healthcare was in the leading quadrant. This is how you get in the leading quadrant. You transition from a relative downtrend to a relative uptrend, and you're starting to see that relative strength really start to emerge over the last 3 to 6 months. In general, when I'm thinking of allocations, thinking of sector, distributions, being in charts where the relative strength is improving is absolutely the way to go. And I think healthcare is really starting to or continuing to demonstrate that. Finally, chart number 3 is Win. Again, you're seeing a bounce in some of the gambling names, and I think that follow through to the upside is compelling only because it's coming after some of the bullish momentum divergences that we've seen. You saw a lower low in price in August. You saw higher lows in momentum. Those are now resolving to the upside with Win getting back above the 50-day moving average. I'll be very interested to see in a sector like energy, where you're seeing a lot of similar bullish divergences on things like Valero? Do you get that follow through like we're seeing in the gambling stocks today? Folks, that is our show for today. Thank you so much for joining us every weekday live after the close at 4 p.m. Eastern for the final bar. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a great night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.